2, 1.
The National Insurance Clearinghouse, the marketing arm of Brokers Alliance, presents a Bravo video event, the Business Insurance Zone, dedicated to financial professionals who use insurance in their practice.
And on today's Business Insurance Zone, financial author Steve Earl, Pay Yourself to Wealth.
And now the host of the Business Insurance Zone, the whiz of the biz, insurance columnist Steve Savant.
Well, welcome everyone to the Business Insurance Zone. We're broadcasting live to a nationwide audience of financial professionals from Fountain Hills, Arizona, home of America's largest fountain. And today with me as my guest is financial author Steve Earl, who wrote Pay Yourself to Wealth. And we're going to talk about how producers can use this book and the system as a prospecting and lead generation system. Welcome to our show, Steve.
Thank you, Steve. Pleasure to be here.
Well, where do you hail from? What state are you from?
I'm actually in Texas now, originally from Virginia, though.
Okay. And, you know, you've been in this business a long time. How long have you been in this?
Just a hair over 20 years.
20 years. Now, you're actually second generation, isn't that right?
Yes, yes.
I mean, your father has been huge in this practice. A lot of people know him nationally.
Yeah, yeah. And, you know, I was fortunate enough to pick up the reins where he left off.
I noticed that this book does not fall far from the tree, right? I mean, this is a lot of Dad's wisdom in here.
Yeah. You know, I think it's hard not to have generational wisdom kind of spill over.
Well, that's part of passing good wisdom on from one generation to another. Now, one of the reasons why we're talking with Steve on our show today is because this is an excellent producer's tool, and it's part of a producer's lead generation system. Let's talk a little bit about that, and then we'll get into the book.
Okay. Well, you know, I wrote Pay Yourself to Wealth to give agents really a tool that can empower them to get in front of people. You know, one of the problems in today's world, it's so hard to get in front of prospects. It seems that, you know, telephone's a very difficult medium to go through. People seem a little more reserved, more cautious as far as trying to get conversational with people, whether it's at their local coffee shop or even at a barbecue. So I wanted to create a tool that would allow agents to create conversations about the services and the tools that they can offer to customers.
I think it is one of the big things that financial advisors are always trying to do. And on our show, we're always trying to promote an environment where you can talk to clients. You've went one step in the front end. You've kind of written a preamble on this. We're actually talking about, here's an idea to get in front. It's a very easy book to read. I killed it in less than an hour. It's nice entry level for retail. But what I like about it is a producer could read this book, have a good understanding of where you're coming from. It's a track to run on. That's really what I liked about it.
Yeah, it is. I mean, the reality is people want guidance right now. I mean, we're in a world where, you know, customers are financially unsure about their futures. And agents in our industry in particular have a wealth of tools at their disposal to help customers out. But the problem is a lot of agents, either they're fearful or they're just shy of getting in front of new prospects face to face.
And is that because they don't know how to engage in a first contact interview?
You know, I don't know that it's that they don't know how to. Maybe it's they've never created the opportunity to. So what Pay Yourself to Wealth does is it automatically creates an opportunity to speak to the parent that you see at the barbecue with the newborn child. Or it creates the opportunity at the coffee shop when you hear maybe a couple of people talking about the stock market. It creates the opportunity for you to introduce yourself into that conversation.
When I'm looking at the contents of this book, I was looking at your front end of the book, the basic truths. Kind of a layout. Here's your kind of, you know, this is my belief system.
Yeah.
Talk a little bit about basic truths.
Well, you know, basic truths, and I think we've forgotten them in America. And the fact is, you are not born into a class in this country, which means no matter where you start, that doesn't determine where you end up. Just like the fact is, a plumber in a lifetime can accumulate more wealth than a physician, and actually use that example in the book. And the basic truths are, there's a difference between how we think about money, you know, whether we are lenders or borrowers. And I go in and I kind of dispel some myths, you know, in that first couple chapters, and I call that the basics truths, to really shed some light on people that no matter whether you're a school teacher Whether you're a plumber, whether you're a construction worker, you have the same opportunities to create wealth for yourself and your family.
Is it, in your mind, when you're laying out, is this hard for people to pick up on, that there are some basic plumb line truths? They seem to struggle with anything that's an absolute.
That's the interesting thing is, the way I put it in the book is I draw upon statistics that are factual to make the case why for example, I'll go back to the plumber, why a plumber in the course of a lifetime can accumulate the exact same amount of wealth, if not more, than a physician. Although there may seem to be income disparity between the two, there are some truths to what the actual take-home is.
Well, I must say, I'm always amazed. I have a producer that I'm very personal friends with. He makes serious six figures in the finance. He lives check to check.
Yeah.
I mean, think about what I just said. I think he's like 300,000, 400,000 a year living check to check.
Yeah, and it's not how much you make,
Right,
it's how much
exactly.
you save that counts. And that's the point of the book.
Well, I like this chapter because I like this phrase, a compass for the road. I mean, I'm a Rand McNally guy. I GPS everything. I'm not leaving my house until it took me about 3 GPSs just to get to Brokers Alliance when I first started working for them, because I didn't know which way to get into Fountain Hills. So when you talk about a compass for the road, what do you mean by that in your book?
Well, I mean, you've got to have a roadmap. Success is not achieved by accident. And whether you're planning, on your personal finances or a business venture, you've got to have a roadmap. You've got to know ultimately where you want to go, and that'll make it easier to figure out how to get there. So I talk about how to develop that roadmap, and then I set on giving you tools to achieving, that ultimate end goal.
And again, this is a great track for producers to use, not only when they're engaging with their client, but it would be great if they went through this whole process themselves first.
Absolutely.
So they can actually get online and do what they're talking about. It's one thing to teach it, it's another thing to live it.
Well, the fact is, there's not one successful self-made person or millionaire in this country that has not fundamentally used all the skill sets that I lay out in the book. It's impossible to achieve financial success without at least having thought through some of the concepts that I've laid out in the book.
Now, of course, the biggest topic or biggest chapter in the book is the one that I'm sure if anybody reads the contents like I did, I went to that first. I'm sorry to say I didn't go to the front page first. I went to this chapter, Double Your Money. I mean, to me, everybody thinks, when I think as a producer, I think of rule of 72.
Yeah.
I think of rule of 115, how money triples. And by the way, if you ever want to have that document, we give that away free at Brokers Alliance at 1-800-290-7226, extension 147, or you can write us at the show's email address, thebiz@brokersalliance.com, and we'll send you the rule of 72 and the rule of 115. It is a great icebreaker on a first contact interview with a client. When we're talking about doubling your money, I know what I just said, rule of 72. But the book kind of takes a whole different idea on doubling up your money.
It does, and that's why I got away from calling it the rule of 72. Because really it is a double your money rule. It tells you what you need to do to calculate how much time it will take to double your money. At the same token, you can reverse that rule and figure out how much are the lenders making on me? How much is my debt costing me? Because if I can double my money, given a certain interest rate in a certain period of time, well, that means if I'm borrowing money, someone's doubling their money on me, meaning I'm having to pay twice as much for what I borrowed. And that's a very fundamental principle of the book, is to learn how to not be a borrower, because the more I can get away from borrowing, the more I have to save. And the more I have to save, the farther I am along in accumulating my personal wealth.
Now, in the book, you talk about the ability to do what you just said, and debt reduction seems to be a big mantra.
Absolutely. People want to know, how do I reduce my personal debt? There's a big psychological barrier among consumers that they think, well, I can't start saving because I owe so much money. And that's why you pay yourself first is a big principle in financial savings and planning.
So when you're budgeting on a monthly, the first person who's going to get a check is you.
Absolutely.
Everybody else is subordinate to you getting paid first.
Absolutely. And the fact is, when you apply debt reduction as a part of that, it makes you feel better because okay, I'm reducing my debt, at the same time I'm paying myself first, and by using the rule of 72, I can very easily calculate without a financial calculator the time it will take me to pay my debt down and what the outcome of my savings will eventually be. And I think that's the important thing is the book gives producers tools to empower their customers without the need of a complicated formula or financial calculator. How do I do this planning? How do I create this financial plan?
In your book, you talk about this idea, and I know that producers should know this, but I'm telling you, if we wrote a blog out on one of our portals, I don't think we'd get the kind of response because they'd say this is the first time they're hearing it. This word called opportunity cost. The opportunity cost of money.
Yeah.
Talk a little bit about that because that was an intriguing part of the book.
Yeah, a lot of people don't realize when you're driving around in a nice car and you're living in a nice home, that has an opportunity cost associated with it. Every asset you have, whether it's your automobile, whether it's the boat, there's the value of the item, and then there's the value of its opportunity cost. Now, as an example, if I go out and spend $50,000 on a boat, even if I pay cash for that boat, sure, I've got an asset that's depreciating that's $50,000, but more importantly, if I went out and invested that $50,000, maybe I could earn an extra $5,000 a year off of that. So that $50,000 carries with it that opportunity cost. So not only is it costing me $50,000 to purchase that boat, but it's costing me $3,000, $4,000, $5,000 a year in earnings that I could have had off of that money had I put it in a savings vehicle.
So you need, before you make your purchase, you need to make a kind of a decision here.
Absolutely. And the reason that's important for agents is when they're talking to their customers about savings, it's important for them to tell them, look, I know you want that brand new car. I know you want to upgrade that house. I know you want to have that vacation home. But let's set back and see what would that home really cost you? And what would the difference be if you were to take that money and put it into this savings vehicle that I'm offering you? And because that way, it's not just what you're going to save with me, but you're gaining then that opportunity of that money.
Now it seems
used.
like in concert with opportunity cost, you had a chapter on value of time. I mean, we are human. We have a time certain, horizon. We're all going to die. So there's a value of time. Talk a little bit about how does that interface with this opportunity cost?
Well, time is money. And most people don't actually understand what that means. Time is money because if I give you $1 today, you can turn that dollar into $2 by applying the double your money rule because you're using time. And you don't ever discredit how valuable that time is.
Well, I like time value of money. I like opportunity costs. I like to weigh it out. I used to think that the end of every lease said, time is of the essence. Now we're talking about time is money. It's the opportunity cost. Well, I really appreciate that. We're going to come back in the second segment and go into the second part of the book because it's really huge and I think we're going to benefit as a producer. You're listening to the Business Insurance Zone, the show that talks about insurance in your practice. You can email me at my show's address, thebiz@brokersalliance.com, or call 1-800-290-7226, extension 147. Coming up in our second segment with Steve Earl, author of Pay Yourself to Wealth. We'll get more into his book right after the break. Whether you're a professional planner pursuing a strategic partner or an insurance distributor seeking a national alliance, your business just went into overdrive. Now enter the largest resource of insurance products and services with unparalleled access to a worldwide audience of consumers through the National Insurance Clearinghouse, the marketing arm of Brokers Alliance, who can take your company and launch it into the stratosphere of success. With countermeasures, the most comprehensive carrier intel in the industry, the MASH unit with field triage underwriting and the premium tolerance test, the life insurance financial evaluation, the most rigorous policy review, and Bravo high definition broadcasting with online social media. Your search just ended. Well, welcome back to the Business Insurance Zone. I'm Steve Steve Savant, your host, insurance columnist, financial color commentator, and interviewer extraordinaire. Remember, before moving forward with anything you hear on our show, always check in and get approval from your CPA, your attorney, and your broker-dealer compliance department. You can call me toll-free at 1-800-290-7226, extension 147 for any quotes or questions you have on life insurance, annuities, disability, long-term care, and, of course, group pensions. Hey, it's not what I know, it's who I know, and that's why I have Steve Earl, author of Pay Yourself to Wealth, a producer's guide we're going to use as a lead generation system. Steve, when I think about getting in front of prospects, that's the name of the game. This is a nice format. What we've done in the first segment is we walk through part of the book, talk a little bit about the front end of why we're using this as a lead generation system.
Well, let's suppose, Steve, you're at a barbecue, and
that part I like.
You notice you've got a young family, maybe a child. Well, ordinarily you might feel shy to approach them and say, "Hi, I'm Steve Earl. I'm an insurance agent." You know, that person might be, a little taken back. What the book does is it allows you to very easily embark in a meaningful conversation with that person. You can say, "Oh, congratulations on your newborn child. Boy, parenting is pretty hard, isn't it?" They're obviously going to agree. And then you can say, "Well, you know what? I've come across a fantastic book for new parents. It's a book that really speaks about, savings and planning and college funding. You know what? I happen to have a copy of it in my car. Let me run and get it." You present that book to the person, becomes a great way to get into a conversation. And that's just one example. I mean, there are many ways that you can utilize it.
Well, I think it's great because you're talking about, especially Gen Yers who are having their first child. Most children don't come with a manual. Okay, I've heard. Okay, I have a father myself. Now we're handing people up front in their beginning of their stages of their family building a book that will actually be a manual, kind of a track to run on. I like that part.
Yep.
Now, when I was looking at the book, we're kind of going through it here in our interview here so that our agents and producers get comfortable of all the topics we're touching on and how we want to express that to a client. I'm looking at here your 4 tools of wealth accumulation, which actually I was going to copyright infringe on and run it on my website. So, but I thought I'd get your permission live in front of all these producers first.
All right. Well, that's just it. Wealth accumulation is not a science, that is very deep or just a few should have access to it. The fact is there are some basic tools that people can use to enhance their ability to save money. Outside of paying off debt, there are tools like staging, where you can incrementally increase the amount of money you save, which is really a fantastic concept because it marries so well into the insurance products that we sell with permanent insurance. Most insurance agents' illustration software will allow them to use the staging. And what staging essentially is let's say the client can afford to start with $50 a month. But ultimately their goal would require them to save $200 a month. So maybe once a year they incrementally increase their savings from $50 a month to $60 a month in the second year and $70 a month thereafter. And it greatly enhances how much money is at the end goal. So that's really what the tools in the book are to give clients a set of tools that they can use to empower them to save more.
Well, the basic premise of the book is we're paying you first. Before we pay anybody else, we're paying you first. And we're going to park that money and make a little money on my money.
Yes.
And that's one of your 4 tools of wealth accumulation. It sounds so basic, but nobody does it.
Yeah.
We all have commitments, regular debt commitments, but we don't have commitments to ourselves to pay ourselves first. So this is an excellent tool to do that. Now, you're talking about construction of plan. Now, every time we hear financial plans, a lot of my producers go, "That's too far over my head.
Yeah.
My client's not going to pay a fee. I deal in middle America. I'm not going to have anybody pay me $1,500 at the floor, a bottom-end plan."
Yeah.
You're talking about a basic plan that's, to me, looked pretty straight up.
Well, this is the interesting thing. When you're constructing any kind of a goal, financial goal, it doesn't have to be complicated. You've really got 2 points. You've got the end point. How much do I need in 10 years? I want to put a down payment on a home, or I want to send, little Bobby to college in 18 years, or I want to retire in 35 years. So there's an end goal, and everybody can say, okay, I need $200,000, I need $500,000. And then you've got how much can I afford to save today? Those are the only 2 points I really care about. And what can I afford to save today? And with that, in literally a 20 or 30 second basic calculations, you should be able to arrive to a plan that'll get you to where you want to go, especially if then you can utilize some of the tools such as staging. And that's what the book does, is it gives people, whether they're planning for college funding, retirement, or just any kind of a goal they want to save for, it gives them a very quick 20, 30 second calculation on how to determine how much can I save today, how much do I need to incrementally increase that savings if I need to incrementally increase, and what is a proper goal amount to achieve, whether it's my retirement or college funding or et cetera.
Well, I think that's another issue for consumers. So when our producer audience today, they're hearing this, I'm thinking, I want to tell the consumer, this is easy to understand. This isn't a complicated financial plan. You don't have to pay a fee to get it.
Yeah.
You're just talking about basic understanding, which actually leads me to my second part. You talk about not only the basic 4 tools that you use to accumulate wealth, but you also talk about how simple investing choices could be.
Yes.
And I'm thinking, well, I got this asset allocation model. It's so thoroughly sophisticated. It's got alternative REITs in it. I think sometimes we're so blind to the obvious that there's a lot more simpler choices and easier to manage.
Absolutely. Well, the fact is, the simplest of the choices is go put your money under your mattress. But there's an opportunity cost, as we've discussed, and there's time value of money, and you don't take use of any of that when you do that. Then you can step up and go to a savings account. In today's world, you might get a 0.25% interest on your money.
It's terrible right now, right?
And then you can go and maybe put all your money in the stock market, but there's a lot of risk to that, as we've seen, recently with the ups and downs. Insurance agents have some fantastic vehicles. Permanent insurance gives the consumers the ability, if they want to have fixed accounts, they can. If they want to, participate in stock market gains, they can. So the book really spells out to the consumer that there are these investment choices out there, and what are the risks associated with those choices.
In fact, a lot of our producers now are getting very, very hip to the idea of, before I talk about current company, current assumption UL, whole life, indexed UL, variable UL, I'm doing a risk tolerance for my client before I even start to unload that, because I have to figure out what can you bear. What's your psychological profile. Now, when I'm looking at all these things, I love this. This is my favorite title of the whole thing. Be your own bank. I love that. I mean, talk about occupy my bank. I want to be my own bank.
Well, and a lot of the book, interwoven into the text in the book, is the concept of, am I a lender or a borrower? And is my psychology one where I'm thinking of myself as someone who always has to borrow money? So what Be Your Own Bank is, it's saying, look, there's a tool out there, a very powerful tool that a lot of people don't even realize exists, called permanent life insurance. And it allows you to be your own private bank. It's got all the tools that a banker utilizes to build wealth for itself, all wrapped up into this nice, neat little package.
Yeah, I've noticed that banks are made of stone and marble, and my house is made of sticks and, drywall. Basically.
Exactly.
I've wondered where all that money was going. Well, when I'm looking at permanent life insurance, I just named 4 of the basic chassis that we use here at Brokers Alliance. And a lot of our producers are indexing right now because they like the preservation of principal, although heads up, remember, there's expense loads coming off that policy, so it's not always completely preservation clean. But I just wanted to bring up the idea of, when I'm looking at these 4 different permanent, once I understand the risk tolerance and I understand which product I'm going to choose, I want to start looking at what my replan, because you talk about planning for retirement, and I can just say, as a baby boomer and part of the ARP nation, I've had to reconfigure my thinking on what the new date is. After 2008 and 9, we're all playing on a different schedule. Talk a little bit about planning for retirement.
Well, and it's okay if retirement is a scale that, maybe initially you want it to be age 60 and then you push it to age 62 and 65. That's okay, as long as you take on action as early as possible, planning for it. You know, time is so valuable. If you have 30 years to save for retirement, you're going to be able to save at a much greater rate than if you have 10 years or 5 years to plan for retirement. And in planning for retirement, you've got to take into consideration, do I want to pay Uncle Sam today before I put money into my retirement plan, or do I want to pay at age 65 when I need the money and take the money out? So in planning for retirement, you really have to take into consideration not only the fact that I need to put money away and how much do I need to put away, but then when the day comes at age 65, you know, how do I have access to my money? And, you know, how much of my money do I have access to? Because you might have $500,000 in an account, but if you can only have access to 300,000 of it because Uncle Sam gets 200,000, you really don't have 500,000 in the account. Very important to understand.
Well, again, we're talking again with Steve Earl, author of Pay Yourself to Wealth. You can call us 1-800-290-7226, extension 147, and request your copy of Pay Yourself to Wealth, written by Steve Earl, a guy that's been in the business and a second-generation planner, so that you can understand what it's like to get into a new lead generation system. This is part of his turnkey marketing system for producers. It's a great, easy read, not hard to do at all. And I want to talk about, he also wrote in the book, I really liked it, a whole area on college planning. College planning that could really help you and your children, and I have to add, as a grandparent, your grandchildren as well. Well, thanks for being on our show, Steve. I really appreciate it. Remember, you can view and download this show on high definition 1080p on our on-demand video archive section located on our homepage at www.brokersalliance.com, on YouTube, Vimeo, Facebook, LinkedIn, and Twitter. I'm Steve Savant. You've been listening to the Business Insurance Zone. That's the buzz on the biz for today. Get in the zone, the Business Insurance Zone.
This has been a Bravo video event of the National Insurance Clearinghouse, the marketing arm of Brokers Alliance, one of the largest distributors of insurance products and services to a nationwide network of insurance professionals. Need insurance guidance? Call Brokers Alliance.